Hello everyone, it's Janne Mutta here, Chief Market Analyst for TIOmarkets. And in this webinar, I'm going to teach you how to place your first trades, but I'm also going to teach you how you can scale into positions and still keep track of the risk generated in that process. I'm going to give you some hints on how to, especially with MT5 platform, enter into trades using a little bit more advanced trading techniques or trade entry techniques. If you have any questions, please don't hesitate to ask. And afterwards, if you're watching this on video, you can email us on support@tiomarkets.com. I hope you find this helpful and let us know what you think about this webinar. And if you have any ideas or suggestions for future webinars, we would be happy to hear about them. So the email address again is support@tiomarkets.com. Anyway, this is important to show you guys. Take a screenshot or pause the video if you're watching this later, but only watch this video, only participate in this webinar if you agree with this disclaimer and with the fact that we don't provide any investment advice. So here, this is the first slide we talked about. You need to go to TIOmarkets.com, and when you go there is on the left hand side, where the menu is, you can see this register, and once you click that, it opens up this form. And now basically put in your name, and down here you can choose the regulator. Like I said, you come from UK or Euro area, you can choose FCA, otherwise it's SVG. And once you click next and accept and get the registration done, then you are emailed with this. I'm going to show you. Basically, you get the wallet ID emailed to you and the password. You know this because you have completed the registration just a moment ago. Always make a note of what the password is. And then you can place your first deposit in the portal, and here we go again. This is the client portal ready here. So here's the deposit and the deposit options like we talked about earlier. You have the bank transfer, you have SEPA if you're in Europe, and then MasterCard and Rave. Okay, let's go to open a demo account. And now the process is exactly the same for the live account, but we are going to stick with the demo because this is all about learning. So it opens up this window where you have platform, account type, currency, and leverage. And here's the first choice. Here's the first choice you need to make. Is it MT4 or MT5? I prefer MT5 after using both. You might have some indicators that only work in MT4, maybe some favorite indicators or EAs, and you want to therefore stick to MT4. But if you go for MT5, if you choose MT5, you get some more options which are useful. For instance, one sort of specific order type, which I'm going to show you in a moment. It's kind of helpful. And okay, let's choose MT5. Then you go and choose the account type. This is really valid, or say when you are in opening a live account, then you have more options to choose from, but when it's a demo, then it's standard only. Then you can choose your account currency. I'm going to choose Euro now because I have chosen USD here already. I opened an account earlier just to speed this process up. But once you've chosen your account currency, go to leverage. Now, some people might be asking how much leverage you need. Basically, this is really a question of how much you need. Most of the people never need 500, 400 or 300 even. You have to be very, very skilled trader in order to trade with high leverage, because higher the leverage, the more skill it takes for you to pick the very moment when the market is about to turn and move in your favor. So I'd say anything, leverage of 100 is more than enough. Then you obviously need to choose the terms and conditions, make sure you read them too, and then you open the demo account. All right, then what happens is that you will get another email. The account number for the MT4 or MT5 platform is emailed to you. You get the account number and the password, and then you need to go to do the downloading if you haven't done it already. Let me go there again. So download center is up here, and then very basic Windows stuff. You have always, I'm sure most of you have installed software so often, but if there is any problems, go to this orangey thingy down here on the right hand side. It takes you to our customer support team. They will help you to figure out how to do this if you have any problems. So that's there for you guys always. And if you prefer email, then you have to email support@TIOmarkets.com. All right, so then I want to show you this. Before we go to MT5, in this case, I'm going to use MT5 platform in this presentation. I wanted to show you this. This is something that people ask quite often because they forget their passwords. Now, in order to reset the password, choose the account, the demo account that you have here. There's a list of accounts if you have more of them open. So choose the one you want to set or reset the password for. Then go to account settings and then just reset the password, and it will be emailed to you. Okay. So let's go and start getting familiar with MT5 trading platform. This is pretty much how it looks like when you first open it, except that this is at 0.01 usually. And by the way, now that we are looking at this platform, you might have some questions that I might not cover. Obviously, then let me know. I'm more than happy to help you out. So if you have any questions on how to open a trade, how to close a trade, how to set trailing stops, how to choose the way you trade, etc. So feel free to ask those questions. Anyway, so this is how it looks like. I'm going to show you, before we open a trade, I'm going to show you some of the things that I always do when I open this platform, the MetaTrader platform, for the first time, because I find all the noises and sounds annoying. This is one of the first things I do. I go to Tools menu and I choose Options. And in here, there is a tab called Events. And I'm usually basically, because I want to get all of these out. So I want to disable all of them so that they don't bother me. So I double click them. There's only one of them that I don't disable, and that's Alert. All the other stuff, that's meaningless. I don't find any reasonable. I just find them annoying. Let's say that. It's better to have alerts only. So that basically means that if I want to place an alert, say I want to know if the price drops to 141.07, this level here. So I right click on the chart, I choose trading, and then I choose alert. So now we have the red arrow here, basically signifying that if the price moves there, I know about it. Then I get a sort of sound alert that the the market is now there, and I need to consider whether I want to be entering a trade here or exiting a trade, whichever way it is. But that's the only one I'm using. That's the only alert I'm using here. If you want to disable all of them, you just take that tick off. Then on Trading tab, this is the first one I usually check here. I want to set this to default. And now, depending on your trading account size, it really depends. Based on the trading account that you have, say if it's €1,000, dollars, or 20,000 euros or dollars, it obviously makes a huge difference to your trading size per trade. So I'm going to set this to one contract at the moment. So that's $10 per pip in Euro USD. But you might also here decide, let's say that you have a trading strategy that requires you to scale into your trades. So let's say that you want to scale in with 5 different lots, then you might have 0.20 here. And then the maximum exposure is one contract. But for the simplicity of this, for simplicity's sake and for this presentation, I'm going to use one contract here now. And then you may have to make sure that you have this box here ticked so that you can execute immediately and no problems with the execution there. So these 2 tabs are really the ones that I check, and that's it really. So it's the trade tab and the events. And then the next thing is the colors in the charts. I really don't like the grid here. So I right click on the chart, go to properties. Here it is. And then I choose, I like the white background. So you might think it's a little too bright, so you can stick with the black, obviously. But yeah, I just like this. And black on white is quite simple. Not too much colors, not too many distractions. And if you click Ctrl and G on your keyboard, that's how you can get rid of the grid. All right. Cool. So here we are. Any questions this far? Maybe you can type in your questions while I speak. Okay. Then the next the step here is to make sure that we have all the trading instruments we need. So go to Market Watch and right click on it. And then just, if you choose Show All, you get all the markets that you can trade. And obviously, you might be trading only some of the markets. Then you want to keep them hidden and add the markets that you are interested in. So there's Euro USD. And one of the easiest ways to create a new chart in this platform, using this platform, is to go here, go to Market Watch, and drag and drop down here, and it gives you the chart. Okay, so, and this is set to the default colors now. If you don't like these colors, if you prefer, say, this for instance, you can go and right click on it and go to templates, and then you choose Save Template. Type in here default, and now this is saved as the default. And let's test it. So if Euro USD chart is opened by drag and drop, we get we get the right colors. And obviously, whatever you have, moving averages, Bollinger Bands, oscillators, they will be sort of saved into that same the same template, the default template. Cool. So let's go and see how we actually place the trades. Any questions? By the way, while we are here, let me know how long you guys have been trading. How many of you are very, very new to trading, just taking your first steps? And how many of you have been trading the markets for maybe a number of years or? Hey, Dimitri, excellent. Been profitable for a year now. Sorry, been trading for a year now, still not profitable. Sorry, I would say, Dimitri, don't worry about not being profitable yet. Just keep on learning. Make 2 lists. I find this very helpful. This is going a little bit off topic, but I want to help you out here. Take a pen and A4 paper. Divide the paper into 2 with a line going down in the middle. So vertical line in the middle, and then you have pluses on the left and minuses on the right. So with whichever way you want to mark them down, say you have a big plus on the left hand side and big minus on the right hand side. And then on every day, if you find that you did something that helped you to make money, you write that down on the left hand side. If you find that you lost money because of certain actions, you write those actions down on the under the minus sign. So after a few days of trading, or maybe a couple of weeks of trading, you have a list of things that you can see that have helped you to make money, and a list of things that have hindered you from making money or have cost you some money. Does it make sense? Then you read this list every morning, and you keep on reading and writing down these things every day, and then reading this list every morning so that you can define what you need to do differently. Does it help you? Dimitri, is this helpful? Or anybody else, you can comment also. If you find this being just a nonsense, let me know. But I found it helpful myself. All right. So there are people who have been trading since November, learning, want to learn how to analyze the charts, still new. Yeah, cool. Excellent. Very good, Dimitri. So Dimitri just wrote down my instructions on a piece of paper, and that's why the delay in answering my question. Anyway, so I hope this webinar will help you in many ways, actually. I want to give you some ideas on how to analyze the charts too. But yeah, let's take a look at USD JPY, for instance. And I'm going to apply the template that we just saved as a default. So here it is, default, and actually, yeah, this is enough. So what's happening with this market? It's USD yen in 1 hour time frame. And if I'm looking at this, I'm seeing that the market was moving lower, making lower highs and lower lows. But now it seems to be gaining strength. Now it seems to be breaking out of this channel. And as you can see, here was a level that supported the price. 1, 2, 3 times, and the same area kind of matches. Actually, if we take this low here, it matches this high and that high exactly. So you might notice after some time that there is no such thing as an exact resistance or support level, but they are zones, like here. The market found support there and here, and then the same area acted as resistance. So now if you make this conclusion that the market is actually not going down anymore, but it's pushing higher, so we can see the dollar strengthening against the yen, then you obviously, what do you want to do? My dear audience, what do you want to do here? Do you try to fade the movement, or do you want to be a buyer? Seifel wants to buy. F2K wants to buy. Dimitri wants to buy. Anybody who wants to sell? Okay, I would be a buyer too. Yes. It kind of makes sense to go with the flow, as they say, because the market is, little guys don't move the market. It's the big money that moves the prices. And obviously there's more sort of choppiness in 1 hour charts and more false signals than in 1 hour charts than in 1 day charts, for instance. But on the other hand, you get more signals too. So the question is, where do you want to buy? And how much do you want to buy? In an uptrend, ideally, we want to be buyers close to supports and buy the pullbacks, because then the market is more likely to give us more immediate results. Sitha is saying that waiting to buy. Yeah, that would be exactly my approach. Because if the market has already moved higher, okay, it can still keep on moving, but it can do this also. Let me see, there is, okay, this platform doesn't have an arrow yet here in the, there is the arrow. So insert and close. So the market, if we buy right now, the market could do this, move down here to the trend line and then move higher. That would mean that we are waiting. We have to accept about 10 pips. That's not huge, but sometimes it can be much more. So if you want to have an opportunity to buy the market at some levels where you can have immediate movement in your favor, then you want to be a buyer of dips in rising markets and seller of rallies in markets that go down. Another option, obviously, is to say that we want to scale in. But in order to get to what we wanted to do without waiting for the market to pull back, and this is exactly what we wanted to do. We wanted to teach you how to trade. So I'm going to use the scale in idea here. I'm going to say that because the account is about 10K, I'm going to say that my maximum risk per day or per trade, depending how we look at it, is about $200. So if I don't risk more than $200, which is 2% of the account size, then I will be there tomorrow and the day after. I will be in the game, learning, and that's the main thing. So, a logical place to or level to place the stops is below these candles here. So That's about 25 pips away. With one full contract, that would be $244. So if I buy 0.20 contracts, then that's really not too much in terms of percentages relative to my account size. So now we have placed a trade. We have hit the buy button here, and we have to make sure there is a protective stop in place. And the easiest way to do that, when you have a trade open, the easiest way is to drag down from here. The added benefit there is that you see how much on the left hand side. You can see that number changing, 1926, 2349, 3304. You can see how much you are risking at the moment. So 44.82, so about 0.5% there. Okay. And if you want to add to the trade, you have to either use market orders like I just did, or you can place limits or stops. And this is what we are going to cover next. So first of all, let's think about what is a limit order. Limit is always an order that is below the current market price, if it's a buy limit. And we're going to cover the sell orders soon, but let's stick with the buy side first. So limit buy tells our system, tells the broker that we want to be, or you as a trader, you want to be a buyer, but you don't want to pay more than the limit price. So above this black trend line here, I think we can safely say that we are bullish. If the market fails to honor this line and just keeps on going lower, there's a big probability that the market isn't moving the way we expected it to. It could go down, it could chop down here, and then, excuse me, then go further down, or keep on chopping and then turn higher. But either way, it isn't behaving like we expected. Now we have seen the break of these resistance levels, and we are seeing higher lows. We are seeing market breaking out of the channel. So if this is a good trade, excuse me, if this is a good trade, then the market is going to honor this process and keep on going higher. So let's have another order here. And what I'm doing, I'm right clicking here inside this zone that we noticed. And we go to trading and we choose buy limit. Alternatively, you can just click here. And it places a buy limit there. Now, if you drag an order that is a pending order here, it's just going to move down with your mouse. So this is not what we want. We wanted to have a buy order inside this zone. So what we do next, we right click this and we choose modify. And it gives us the order box where we have several windows, several fields, and one of them is stop loss. This is where we define the level where we want to get out of this trade. So the easiest way, again, the one I use mostly is I just start pressing down here. And you can see the stop loss order here at 109.07. So obviously we don't want to have it so close, we put it here. We press it lower. And once you click modify, you can then modify it again quite easily down here. So you drag it down And now again here on the left hand side, you can see how much you are risking. So you remember that on this one you are risking 44.82, so roughly $50 or 0.5% of the account size. Here you are risking 24, 25 and 36. So that's still less than $100. So pretty good. And you can always use one very useful feature in MT5 and MT4 too, but especially in this platform. If you choose this crosshair tool and you think that, okay, I'm going to place an order here, how much am I risking? I can do that calculation very quickly if I just drag down from there. So from that point to this, the risk is $136. You can see that number there, 136 points. That's actually how many dollars you would be risking per contract. And because you are adding another 0.2 here, you are saying that, okay, I'm risking 1/5 of that 136. So still well within our 2% budget. So let's place an order here. Another buy limit. And we double click on it. And we keep on pressing. And it moves the stop down. We modify. And then we adjust. So another $25 of risk added to this trade. If the market ever comes down here, those orders are triggered, and then the full risk is realized. And if you go and click Ctrl and T on your keyboard, you can see that there are 2 orders that are sitting in the market, waiting for the market to go there. And basically, yeah, if we are lucky, the market comes down a bit, picks them up and keeps on going higher. But then obviously the other option is that the market just keeps on going higher and never goes there. And people often think that if the market's going higher and I choose one trading approach, say scaling in, then the market just goes higher and never picks these limits. You are scaling in with limits, and then the market just keeps on going higher. Then they tend to think that this is a bad approach. But it's the wrong way to think about this, because no strategy decisions should be placed on or made on something that is happening only once or twice or few times. You always should be focusing on the next 10,000 trades. So if over the next 10,000 trades, it is likely that the markets are going to chop before they go higher, then it makes sense to have this approach where you scale in and you have the buy limits. But if you observe your own trading, that the market tends to move very quickly and very directionally after you place the trades, let's say that from here the market would go like this, then obviously you need to scale without these limits, or you need to buy everything you can as quickly as possible. Okay, let's move on. We have spent a little bit too much time here already, so I want to show you something else. And in order to do this, I'm going to have to get rid of these. And by the way, in MT5 you have an option to have your trading history here on the charts, but you can get rid of it as well if you find it disturbing. because after a while there'll be lots of little blue and red arrows on your chart. So let's go back to my slides for a moment. I wanted to talk to you about buy stop limit. This is something that if you go to some manuals, it is sometimes a little difficult to understand how this works. So I wanted to explain this to you very thoroughly. Buy stop limit is an order that combines a stop order and buy limit. So we are basically saying that we want to be buyers if the ask price reaches a specific level, and this specific level we indicate in the price field. So here in this example, it's USD yen at 109.16, and then if the price goes there, it acts as a trigger for the system to place a limit order at 109.08. So this basically allows you to do what I just did, but with some more sophistication. And I'm going to show you exactly how you can do this. Then obviously you need to have your stop loss to limit the losses, and you need to have your take profits. Don't worry about those. But when you're using buy stop limit, you need to focus on price and stop limit price. And this is how it works. This is the same setup that we just studied. And this is maybe an hour before this webinar started. So at the time, the market was trading at 109.08 roughly. Sorry, 109.09.5. And I said basically to myself that if the price rallies up to 109.16, then I want to have a limit buy at 109.08, which is above this red line. The red line is the resistance there that we identified earlier. So in this case, if the market rallies and touches the blue line, the trigger price here is touched and the system places a limit order to buy at 109.08 here. And after that is placed on the market, this order, it looks like this. We have the trigger price and we have the potential trade entry price, and then we have a stop loss and a take profit. Is this clear? Does it make sense? Anybody out there? Yeah, good. Have you guys been using this before? Is it something that you have tested your own or used in your trading, or something that you have seen there but you thought maybe I want to use that but I don't know how to do that? Okay, Kenneth saying I haven't, F2K haven't, Simon has used it before. Good. Okay, so it's actually good to cover this. I find it very useful because often you have these situations where the market is doing something that you think, okay, I think there's a chance that this market is going to go higher, but I'm not there executing if it rallies and then retraces. This is the way to automate this. This is how you can tell our system that I want to be a buyer here, for instance, if the market first rallies a bit and so shows some strength. And it kind of makes sense because when the market is moving higher, it moves up. There's a rally and a retracement, rally, and then there will be a retracement, most often than not. Cool. All right, then the same can be done obviously for markets that are moving lower. Let's see how Euro USD looks like. What do you think? Is it going down or up? Is it going sideways, or what's happening with this market? Any ideas? Dimitri is saying looks like it might be going down. Okay. If you have strength in USD yen, then that kind of suggests that maybe there is weakness in euro. Yeah, it is under the moving average, true. And if USD has strength, maybe euro isn't that reliable then. Okay, so let's assume that we have this market is weak. That's our assumption. So using what we just learned on the short side, what should we do? F2K is saying the market might be going higher. Okay, sounds like we have a proper market here. That's very good. But first, let's cover the downside. So we are seeing a support down here. And let's say that we want to be sellers if this is violated. If the market does this, down, and if it then moves higher, we want to be sellers, right? So that's roughly the idea. And obviously it's a little difficult to say how much you have to have penetration of the key support before you can actually go short. But let's say that with euro we're looking something like 29,197, about 7 pips. So we go and we right click the chart, we go to trading, and we hit new order. And then we go and choose, instead of market execution, we choose pending order. The volume is 1 because we set that in the tools menu to be 1 each time. So depending how you want to play this, whether you actually want to scale in or go with one single order, that's really up to you. But for this time, I'm going to use one lot here. And now we want to have the trigger price, and that's the lower red line here, because we want to see the market moving below this. So 1.2191. 1.2191, that's our trigger price. And yeah, then we have to choose sell stop limit and then choose the price where we want to have the sell stop limit. And that's, let's say that's about this red line here, 0.2197. So we'll just go there, 0.2197. There it is. And we want to have the stop loss order, say maybe that stop loss order, if we are looking to stay within our 2% budget, we want to have that's 270, that's a little too high. So 200 would be there. That's $200. Okay, I think that's decent. We can have that. So stop loss, and that would be, sorry, I missed the level, how much it was. There it is again, 204, 2218. So 2218. And then the take profit somewhere, say about 21.65. And we place the order. Okay. And I'm going to take the lines off so that you can see the text. So we have a sell stop limit that is activated if we first go to 121.91. So the market will go short at one contract or you will go short on this market at 21.97 if 21.91 is first touched. Okay. Does it make sense? Again, is my question. Is there anything that is difficult to understand? Right. Cool. Then obviously the other option would be to say that this market is likely to go higher, and then we would have to do it the other way around, just like we did here. Okay, then let's say that we want to be have a simple buy stop order in place. Let's use a smaller time frame here, and I'm going to draw a new channel here. We are looking at this market and we think that it might be going higher, and so there is the current resistance at the moment, and we want to buy if this resistance is penetrated. So I'm not saying this is a preferred way of doing this. This is just an example to show you how to place a buy stop order. So that is very, very simple. You just go to the level where you want to be a buyer, right click on the chart, go to trading and choose buy stop. Now that order is down here. It is placed in the market, but there's no order to actually, there's no stop loss order. So there's two ways of doing or adding the stop. One of them is to right click and then you go and modify and do what you did earlier. And the other option is to go here where the order is in the terminal. You double click on stop loss and that opens the same window again. And this is now an order to go long, as it's a buy order. So then obviously you need the stop loss below the buy order side, buy order level. So do this, click modify. Here's your stop loss order. The risk is 13.50. That's very low. So maybe we can have the stop down here. You're risking $30. That's 0.3% on 10K account. So very, very small risk. Okay. And again, if you want to get rid of some orders, you just go here and click the cross sign on the right hand side. Now with this Euro USD, let's go and see the 5-minute chart. Let's say that you are looking, somebody was saying that he believes the market might be going higher. Then obviously you have the option of just buying the market, then dragging down, and you have your stop in place. Now you have some exposure in the market, and your risk is about $100, which is about 1% on 10K account, very decent. And then we go and have the target, up there, and that's, sorry, that was, let's take that out. I'm gonna take the sell stop limit out to. Okay, so now we only have this one order here. We are long on Euro USD, and we have the stop in, and we want to have the limit order to take profits. So we just go here and start dragging higher, and you can see on the right hand side what is the potential there in this trade. Say that we believe it's going to go up to this resistance, so that's $300. Now in this case you would be risking $100 to make 300, which is pretty decent. It's a good risk to reward ratio. Okay, guys, we have been here for an hour now, and basically we have covered buy stops, we have covered market entries, we have covered these more advanced order types. Is there anything that you would like to ask before we finish for today? Any questions? Oh, thank you, Christian. Thank you for coming. I really appreciate you taking the time. I hope this was helpful. We provide training in terms of these webinars. F2K, maybe you can be more specific what kind of training you would like to have, and I'm more than happy to see if we can do that. All right, we do the webinars at the moment. Simon is asking when the webinar. When there's the next webinar. We will be doing the next one in about a month's time. And this will be emailed to you, this recording also. Now, another question. What's the ideal time frame to analyze? It really depends on your trading style. I mean, if you like to take quick profits from the market, I would say use the hourly charts. Figure out where the market is going, where the momentum is, and then you can see when the market is moving above the moving average, it is making higher highs and higher lows, and you know that momentum is on your side, and then you just go with the market. But if you are more interested in position trading, then obviously you would want to use daily and weekly time frames, or swing trades for that matter. Basically, there is no single answer to that question. But the smaller the time frame, the more difficult it is to figure out what is actually a signal and what is just noise. All right, F2K is asking how to trade the market, different techniques, how to use the different indicators. Yeah, we do teach you on this in the webinars. So keep on coming and, let us know what kinds of topics you are most interested in, and we are happy to help you out. We're more than happy to help you grow as traders, and because this is not easy. This is something that takes some effort to learn, and it actually takes somebody like me who's been over 20 years in the markets. I mean, I can help you guys a lot. Okay, Kenneth is asking, what's the minimum? You can start with $50, but in order to really trade, I think you need a few $100 at least. And then you trade very, very, very small until you know that you can make money. Phone or laptop? I would stay away from phone trading because it means that you are taking trades in a whim. Rather, you should be sitting down and concentrating and doing your analysis, or just in general, just taking time and and concentrating makes a big difference. I have seen people trading on phones, and that's usually not very profitable. Let me see what else. We do analysis on daily basis. So there's Saiful is asking if we do weekly analysis. There is analysis every week, every day, and you can go to TIOmarkets.com/analysis and find it there. So go to TIO. Let me type it here. TIOmarkets.com/analysis. This is where you find the stuff every morning, and if there is something, always if there's any feedback, let me know. And let me see if there's something else, any questions that I might have missed. Okay, like I said earlier, my preference is MT5. The question is, which is my preference, MT4 or MT5? I like MT5 because it has more features, but if you have some special indicators that are for MT4 only, then you should choose MT4, obviously. But like these more sort of sophisticated order types, they are not available in MT4. And how do you buy stocks? That's not a simple question to answer. Obviously, you can do that in MT5, and we can actually have a webinar on that. So if you stay G10, if you stay tuned, we will help you out on this one too. But it really takes a webinar to explain how to buy stocks. Obviously, anybody can buy any stocks, but in order to make some money while you buy, it's probably going to be requiring more time than just a quick answer. Kenneth is asking if we can trade cryptocurrencies. Yes, you can do that. We have Bitcoin, we have Ethereum, and we have Litecoin. So you can use those three markets, and you can trade them very easily up and down. So meaning you can go long and short using CFDs and the leverage. So yeah, you can do that. Cool. Okay. And I think we have to call it a day. It's been a good hour or so that we have spent time here, but it has been nice. Thank you guys.